Hey everyone, and welcome back to another video for today. So as you can see, on Monday we actually ended the day pretty okay, right? Friday after the market closed, we've got that Moody's downgrade, and throughout the whole weekend there was a lot of talk about, well, what is this going to do to the stock market, especially after the rally that we've seen since the start of April. I did a specific video about that when we went over the portfolio yesterday, well, or Sunday. If you missed that, that would be in the top right corner. Now, yes, we did start the day pretty red, but a lot of these stocks, as you can see, closed out the day green or flat-ish. Now, yes, there are some stocks like Tesla or Palantir, which, let's be honest, are expensive stocks. They did go down on Monday. So yeah, it happens. But then again, I guess this is a better outcome than what a lot of us thought would happen on Monday because of that downgrade, and not even just because of that downgrade, just because of the fact that we did go up week after week, day after day. Maybe the market was due for a little pullback, and maybe that might still happen. Remains to be seen. Now in today's video, I do want to touch on two companies that have seen their stocks beaten down quite a lot over the last couple of months, and actually over the last 12 months. These stocks are still down over 40%, sometimes even closer to 50%. Now, these are two companies that I already touched on this channel previously, and yet they become cheaper and cheaper. Companies are Novo Nordisk and Evolution AB. It's been a while since I've talked about Evolution, so I'd like to touch on them here yet again because it has become cheaper, and yet the company is still doing well. Of course, there are some short-term issues, and I'll touch on that as well. And then for Novo Nordisk, CEO is resigning, is being let go, whatever you want to call it. And now there's basically no CEO. Well, he's staying around because, well, you need a CEO until you get a new one. But that was also very strange. So let's talk about that, and let's talk about the fact that I'm still putting those two companies on my personal watch list, but a lot of you probably are putting them on your buy list already at these prices. So let's touch on those two companies. If you enjoy these type of videos, hit the thumbs up button, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so company number one is Evolution AB. Now, unfortunately, Evolution AB, well, not unfortunately, for the European viewers here, you can of course buy it in euros if you want to, or you can buy it in Swedish kron as well. There is an option to buy it in dollars, but that's in the OTC markets. So there you have it. Those are all the options. Now, right now, as you can see, over the past 5 years, we are still experiencing an over 66% drawdown from the peak back in 2021. And of course, since then, the company has grown, but has not grown as fast as before. Plus, like I said, there are some short-term issues, which we're going to touch on in a bit. Market cap wise, we're at $13.7 billion, a trailing PE of 10, price to free cash flow of 9.5. Margins wise, we are here in a high margin business. Revenue growth, looking out 2 years out, 7.6% on the compound annual growth rate, and EPS just over 10%. Now, I do also want to say a special thanks to FinChat for sponsoring this video. If you don't know what FinChat is, it's a stock research platform which we're using right now and which we've been using in every single video. Now, if you don't like to listen to the whole transcript or read through it, I suggest you do so. But if you want, you can go here and generate an AI summary. And then if you've got some questions, you can ask it here as well, and it will do its best to answer. Now, if you just want to look at the summary, basically what they've reported last quarter, it's basically this. Q1 report reveals net revenue of 520.9 million euros, a 3.9% increase year over year, with constant currency growth estimated at 6.1%. EBITDA did decrease, and that's a problem. EBITDA decreased, adjusted EBITDA margin decreased as well. It was also at the lower end of their own guidance. They said the following: the company attributed the slower growth to ring fencing in regulated European markets and ongoing cybersecurity issues in Asia. I'm going to talk about that in a bit as well. And then they continue here by giving us a bit more context on the dividend payments, repurchase program, and all of that. Now, what you can also do is, of course, look at company-specific metrics on FinChat. So if you go to financials, then we'll go to segments and KPIs. Right now, what you're seeing here are total revenue growth and free cash flow projected growth here as well. But if you want to look at specific company specific metrics, we of course can look at the two segments, the two business segments for the business, which are, well, live casinos and random number generators, or RNG. And here we can see the growth for the last 2 years. So live revenue has grown at a compound annual growth rate of 11.6%, and RNG has only grown at a compound annual growth rate of 2%. And that has been an issue previously, but this was a business that previously actually did not exist, as you can see right here. This was supposed to bring growth to the company. It did bring a little bit of growth, but it has been very, very slow. Now, over the last couple of quarters, we have seen that grow a little bit more. Now, can that momentum continue? Remains to be seen. We can also see here that revenue quarter over quarter has come down, and that hasn't really happened for a long time, or ever, if I'm looking at this correctly. And so if you want to try FinChat out yourself, there's a link down in the description and in the pinned comment. New users will get FinChat Pro for free for 2 weeks. Then if you love it, you can always upgrade and you'll get 15% off if you use my link. So you help yourself and you help the channel as well. And I really appreciate everyone that has been using my link like crazy over the past couple of weeks. I really appreciate that, and hopefully you gained some value from that as well. Moving on to the comments made by management. So they acknowledge the deceleration in growth rates, and this is not only impacted by the development of the currency rates, but also connected to conscious actions they have taken that will be beneficial for the business in the longer term. Firstly, they addressed the ongoing issues in Asia, where there were implemented technical countermeasures to stop the criminal cyber activity, which has put pressure on revenue growth. Secondly, and on top of what we have already done in the United Kingdom to meet regulatory requirements, we have taken proactive and self-initiated actions in February to ring-fence additional regulated markets in Europe. The effects have varied, with the largest negative revenue impact in the markets where channelization is low. We have had constructive dialogues with all large European regulators in the quarter and continue to support them in the ways that we can. However, it is important to remember that channelization is primarily dependent on factors outside of our control, i.e. the ways in which the regulatory parameters are structured. To create a long-term sustainable regulatory environment in which the end user are protected while also having an entertaining gaming experience is a balance of those parameters. The long-term picture remains intact, regulation is positive and attracts new end users over time, but regulations must be done in a way that serves the needs of the players in each country. And remember, regulations also means higher barrier of entry, which of course is great for evolutions and not so great for potential future competitors. They continued by saying, am I unhappy with the overall development in the quarter? Definitely not, because everything that we have done supports the mission to increase the gap to competition. 2025 will be yet another great year for evolution. That's the bottom line. And maybe them starting again by acquiring more and more shares is a sign of confidence. Now, if we're looking back at the reported quarters, as you can see, net revenue only increased 3.9%, EBITDA was down 1.1%, adjusted EBITDA down 1.1% as well, profit for the period down 5.4%, and this is what we've seen before. Now, looking at the projected growth, we can clearly see that 2025 is going to be a down year, but that's followed by 2 consecutive fiscal years where currently the expectations are that revenue and free cash flow should grow just above 10%. Looking at where they generate the majority of their revenue still comes from Asia, then Europe, then North America. But what I do want to show you here yet again is the share of regulated markets have gone up consistently. Actually, we can see it right here where they generate their revenue from. You can see that actually in North America, that has been growing faster than the other markets, right? Europe has come down quarter over quarter. Asia has come down quarter over quarter and barely grew year over year. Europe is actually down year over year, but North America continues to be a strong market for them. Same with, I'd say, LATAM year over year is fine, but quarter over quarter here, we are down as well. Now, when we look at free cash flow margin, we are still above 55% despite the increase in capex. And here we can see this is a trend that you don't want to see, adjusted EBITDA margin coming down. Hopefully, well, at the end of this year, we're done with the margins coming down and we should be going back up. Pricing wise, price to free cash flow forward one, that's 10.8, average was 26.5. If you look at the trailing 12 months PE, sits just over 10, of course, much lower than its historical average. Now, I'm not saying it should be going back to the 50s or 40s, no, but I think around 20 shouldn't be that crazy. So that was Evolution AB. I also know that this is a stock that is not for everyone. Yes, you might even put it in the sin stock basket because it is in the casino side of things. Moving on to stock number 2, and that's Novo Nordisk. Now, Novo Nordisk, as you can see, is also experiencing a drawdown of over 50% from the peak. If we actually look at the last year alone, it's down 55%. And if we look at year to date, we are still down around 23% or so. And over the last 12 months, we're down 50%. This is a company with a market cap of $282 billion, a PE of 18.2 times. Super good margins here. And if we look at the outlook, which I'll show you in a bit as well, revenue should increase at a compound annual growth rate of 15.7% 2 years out, with EPS growing at 18.4%. Now, of course, with Novo Nordisk, you have increased competition from Eli Lilly. You might even say increased competition from compounders as well. More on that in a bit, actually. First up, we've had this announcement last week. Out of nowhere, the CEO is going to step down. As per mutual agreement with the Novo Nordisk board, Lars Jørgensen will step down from his role as CEO of Novo Nordisk. He will continue as CEO for a period to support a smooth transition to new leadership. A search for Lars Jørgensen's successor is ongoing, and an announcement will be made in due course. In connection with the change, Lars Sørensen, chair of, or I don't know if I pronounce this correctly or not, chair of the Novo Nordisk Foundation, will join the Novo Nordisk board initially as an observer. Now, in that letter, they said a couple of things, well, actually the same thing time and time again. So, considering the recent market challenges, the share price decline, and the wish from the Novo Nordisk Foundation, the Novo Nordisk board and Lars Jørgensen have jointly concluded that initiating a CEO succession is in the best interest of the company and its shareholders. Lars Jørgensen has agreed to continue as CEO for a period to support a smooth transition to new leadership. Furthermore, the Novo Nordisk board has agreed with the Novo Nordisk Foundation board that Lars Sørensen, chair of the Novo Nordisk Foundation, will participate as an observer in Novo Nordisk board meetings as of today, with the intention of being nominated for election as a board member at the annual general meeting in 2026. The letter continues, and they do mention the share price decline 3 times. So clearly they're not happy with the share price decline over the last 12 months. But don't forget that the CEO has been there, I believe, 7 to 8 years. And over the past 5 years alone, the stock has doubled. So it's not like he has done nothing, or the stock has done nothing when he was CEO. Now, just in the last 5 years alone, the stock doubled. Now, of course, at one point, the stock was up 342%, and now we've seen a decline of 55%. So, okay, there is that. But I don't think that the main reason is the stock price. I think the bigger reason is this. The bigger reason is that they've let Eli Lilly catch and actually maybe even overtake them. They didn't even lose market share, I believe, to the compounders. No, they lost market share to their main competitor. Now, Ozempic, Novo Nordisk, still extremely strong. Don't get me wrong, billions in free cash flow, billions in revenue, great margins, and all of that. But I do think that they've been asleep at the wheel. I do think that they should have invested way more, especially also in the United States. Maybe they should have been a bit more open as well and continue to take market share or maybe defend market share a bit more aggressively, especially when you compete with Eli Lilly. And I think that's the main reasons why they are firing. Okay, maybe stepping down, but maybe this is the same situation as with Intel and Pat Gelsinger. So we'll see. I don't know who the new CEO could be, and maybe this might actually force them to buy another company. Maybe they'll buy Viking Therapeutics if they really want to compete with the oral solution. Maybe that's an option. Continuing here, pricing wise, like I said, very, very cheap. 18.6 compared to an average of 30. Again, I don't think it should be trading at 30, but higher than 18, I don't think that would be out of the realm of possibilities. Price to free cash flow, 25 times. On average, that was 30. And here, as you can see, free cash flow wise in 2025, we are expected to be down, but then that's expected to go up in the 2 consecutive fiscal years. If you look at fiscal 27 compared to 2025, well, it's basically a doubling of free cash flow. Margin wise, gross profit margin has been around 84-85% for quite a while. Free cash flow margin, that has come down, but as you can see, capex has increased significantly in the last couple of quarters as they are investing now more and more. Once that's over, I fully expect free cash flow margin to go back over 30%. And here you basically have a clearer picture. All of that, of course, can be found on FinChat as well. Now looking at, I'd say, of course, the biggest focus is, well, GLP-1 revenue, and then I'd say maybe total insulin as well. But insulin, as you can see over the last 5 years, basically hasn't grown. But GLP-1 revenue has grown at a compound annual growth rate of over 30%. Yes, of course, it started out small, and now we're already, I wouldn't say a very, very mature business, but trending towards being a mature business. Now, if we go back to FinChat, we can, of course, look at every specific business under the GLP-1 one, under the insulin one, diabetes, and all of that. Here, Wegovy, we can all put that, and then that will give you a nice little representation here. So you can do all of that on FinChat. All in all, to me, it's pretty clear. Okay, me as someone that has a portfolio that's already quite full, I'm not really ready to open up a new position. To me, it's pretty clear. These 2 companies are still good companies, good businesses, and have seen their stock basically cut in half, if not more, since their peak. Now, do I have to rush in to buy it? No, I think we have time here to build up a position if we're interested. But I cannot say that this is not very, very appealing, especially in a market where I'd say there are not that many appealing stocks to buy at these prices. What do you think? Do you agree? Do you disagree? Let me know down in the comment section below. Like, subscribe to all of that, and I see you all in the next one. Bye bye.